Hey friends of future millionaires, Gregory Pierre-Louis here, the backpack entrepreneur. In this video, I want to talk about buying and selling currencies, okay? Now, Forex trading is the simultaneous buying of one currency and selling of another. And currencies are quoted and traded in pairs through a broker, right? Now let's take the European ruble and the United States dollar, for example, or even the British pound and the Japanese yen, right? When you trade in the foreign exchange market, you buy or sell in currency pairs. All right, this is very important for you guys to understand. Now imagine each currency pair constantly in a tug of war with each currency on its own side of the rope. This is what that would look like. And an exchange rate is the relative price of two currencies from two different countries, right? And the exchange rates fluctuate based on which currency is stronger at the moment. Now, I want to take the time and go over the different categories of currency pairs with you, all right? Here you have your major pairs. And major pairs always include the United States dollar, okay? Then you have your cross pairs. And cross pairs do not include the United States dollar, okay? I repeat, cross pairs do not include the United States dollar. And what are minor pairs, right? You have your minor pairs. Cross pairs that involve any of the major currencies, these are known as minor pairs. All right? So if you hear me refer to a pair as a major or a cross or a minor, now you'll understand what I'm referring to. What about those exotic pairs? What are exotic pairs, Greg? Well, exotic pairs consist of one major currency and one currency from an emerging market, okay? So here are some of your major currency pairs. I'm not going to go through all of them, but take a look, get familiar, right? These are your major currency pairs. Remember, the majors are the most liquid in the world. And I'll go over a little bit about what liquidity is in just a moment. Liquidity is the term that's used to describe the level of activity or money in the financial market. Okay, let me go over that. Liquidity is used to describe the level of activity or money in the financial market. Now, if you remember in a prior video that I made, what is traded in Forex? Right? The simple answer to that question was money, right? And here we are. Money, it popped up again, right? So remember this when it comes to liquidity. This is super important. And I can't stress this enough, but when we get to the charts, right, this is when you're really going to have to start paying attention to where liquidity is in the market, okay? So again, liquidity is used to describe the level of activity or money in the financial market. Now, in the foreign exchange market, it's based on the number of active traders buying and selling a specific currency pair and the volume that's being traded, right? The more frequently a currency pair is traded, the higher its liquidity, right? Does this stuff make sense to you? I hope it's making sense for you guys. Now, let me give you an example. More people trade the Euro USD currency pair and at higher volumes than the AUD USD currency pair, right? Now, this is just generally speaking, right? Because Euro USD is probably the most heavily traded pair in the world. It includes two of the most or largest economies, right? The European Union and the United States. So again, more people trade the Euro USD currency pair and at higher volumes than the AUD USD currency pair. But what does that mean? Well, this means that Euro USD is more liquid than AUD USD. There's more liquidity in the Euro USD market than there is in the AUD USD market. Does that make sense? So Here are some of your cross-currency pairs. Again, I'm not going to go through all of these, but definitely take a look, get familiar, because we're going to be utilizing these pairs, going through these pairs, and it's important for you to understand, especially when we get to the chart. You're going to want to understand what the different pairs are. Are we using a major pair? Are we using a minor pair? Are we using an exotic pair or a cross pair, right? And these are some of the other crosses. Now, here are some of your exotic currency pairs, right? USD ZAR, right? That's the South African Rand, right? USD MXN, that's the Mexican peso, right? And so on and so forth. Now, exotic currency pairs are made up of one major currency and one currency from an emerging economy like South Africa, Mexico, Thailand, Singapore, and Chile. And it's not unusual to see spreads that are bigger than that of any major currency pair when it comes to these exotic pairs, okay? So usually on the exotic currencies, you're going to see spreads that are bigger than what you're used to seeing when we're trading any of the major currency pairs, all right? So don't be surprised there. And these are your G10 currency pairs, right? These are the countries: Japan, Canada, Sweden, Norway, Australia, Switzerland, New Zealand, United States, European Union, and the United Kingdom. Now you might be wondering, what are the G10 currency pairs? Well, the G10 currency pairs are 10 of the most heavily traded currencies in the world, which are also 10 of the world's most liquid currencies. So let me go back to that. It's like having a cheat code, right? Here you get to focus on the most liquid markets in the world. So if I were you, I would write these down and use it as a point of reference when I'm thinking about currency pairs to trade, right? Because you want to trade where the money's at, right? We're here to make money, to profit. So you want to trade liquid markets. And these are the most liquid markets in the world. So I hope this lesson was helpful. I hope you got value from this lesson in learning about buying and selling currencies. And I'll see you guys in the next video.